Deciding which broker to use is a huge decision. After all, you could end up investing your money with this company for the next 20 to 30 years, or even longer than that. So whether you're excited to start working on your financial health, scared of the consequences of making a bad choice, or overwhelmed by the amount of investing options there are out there, let me tell you about our good friend Sir Rowan. Sir Rowan was an old knight who had a quest that could change his life forever. He needed to retrieve a mystical relic that promised prosperity for the people of his city. But on his long and tiresome journey to find the relic, he stumbled across a problem, a fork in the road. 3 paths lay ahead of him, each with their own unique challenges. The first of the 3 was a deep and dark swamp. Rowan had no idea what sort of threats he might encounter. For all he knew, everything could be fine. But there also could be disease-ridden creatures waiting to attack, and one bad encounter would result in a long, treacherous illness that would slowly eat away at him over time. When looking at which broker to choose, the first path that Sir Rowan was faced with resembles the fees that you'll pay when using the platform. You might not even notice the fees with some brokers at first, they can be very small, with many platforms only charging around 0.25% a year to invest your money with them. But it's only after a longer period that you realise how much these fees will affect your overall portfolio. And there also could be hidden fees lying beneath the surface, ready to eat into your investments over time as well. The most common fees you'll need to look out for are platform fees and trading fees, but depending on how you're planning to invest, other fees like foreign exchange, inactivity, or deposit and withdrawal fees, and a range of other charges could impact your decision as well. In terms of platform fees, brokers will typically either charge you a flat account fee per month, which could be between £3 to £12 depending on what type of account that you have with them, or they'll charge you a percentage of your portfolio's value every year, usually around 0.1 to 0.5% in most cases, but fees can always vary and they can be higher. There are some brokers that offer 0 account fees and trading fees, so if this is your main concern, then they might be worth looking into. But they also might not have some of the other things that you're looking for, so just remember that fees aren't everything. If you're planning to invest smaller amounts every month, say £100, then you should be very wary of the flat monthly fee approach, as if you end up paying £4 a month for your account, then that's 4% of your investment gone immediately. With that being said though, the monthly fee structure could work in your favour if you're planning to hold a lot of money with your broker, as it's capped at that amount per month. Whereas if you had a £250,000 portfolio and were charged an annual percentage, say 0.5% a year, that'd be £1,250 and it would increase as your portfolio grows, so it can really add up. Trading fees will also be taken every time you complete a trade and can be fairly hefty. If you're wanting to frequently buy shares or ETFs, trading fees can add up fast. However, there are some brokers that will lower the trading fees if you're buying and selling assets multiple times a month. Brokers also tend to change their account fees and trading fees based on what you choose to invest into and what type of account you're investing in. So whether that's a mutual fund, ETF, bonds, individual shares, or if it's a general investment account or a stocks and shares ISA or a pension, and so on. So it's important that you understand exactly what you'll be paying depending on how you want to invest. Trying to keep a tab on all these different charges across a range of different brokers is way more hassle than it needs to be. That's why we made a free tool to help you compare brokers and their fees. When it comes to fees, the key takeaway is to really make sure you're not going to be significantly overpaying based on your approach to investing. And the definition of overpaying is different for every person. For some people, anything more than £0 in fees is too much, and for others, spending thousands per year could be perfectly justifiable. Just make sure that you've done your research to compare the options that would be most suitable for you. But fees aren't the only thing that you need to consider. The first path for Sir Rowan seems daunting, a plunge into the unknown where you're not quite sure what could be lurking. But what about the second path? Would this be any more promising for our friendly old knight? Well, not quite. Ahead of him in his second route lay a bridge that went on far longer than the eye could see. Each of the wooden panels that were supposed to be holding him up seemed to be rotting and about to give way at any moment. But even though many travellers had told Sir Rowan about this very bridge before his quest and reassured him about its stability, he still had doubts in his mind due to the risk involved. When looking into a broker, especially one that you've not heard of before, one question will always pop into your mind. Is this a safe place to hold my money? Much like the giant bridge that Sir Rowan was faced with, it's not always clear whether a broker is going to last in the long term and whether your money is going to be safe with them. Thankfully, there are strict rules and regulations in place to make sure that you are covered and that your money is as safe as it can possibly be. When doing your research, you'll want to look to see if a broker is regulated by the Financial Conduct Authority, or FCA, as if they are, then they'll have to abide by a long list of guidelines that aim to protect your money. One of the major things that FCA requires from brokers is that they comply with CAS rules, which states that they must keep your money and investments separate from their own, otherwise known as ring-fenced. And this is so that if the worst does happen and they do need to close their doors, your money will not be used to pay administration fees or debt, and your investments can simply just be transferred elsewhere. If the broker you're looking at is regulated by the FCA, then cash held on the platform will usually be protected up to £85,000 by the Financial Services Compensation Scheme, or FSCS. There are a couple of catches with this, and I'll link something in the description that goes into a good example of where you wouldn't be protected. Having these regulations in place means that you can quickly find out whether a broker or bank is safe to invest with. But just like the reassurance given to Sir Rowan, this doesn't always get rid of all the doubt. And that's fine. A broker's reputation and history is undoubtedly going to be a factor for a lot of people. If this is the case for you, then you might want to look at some of the more established brokers that have a long history of looking after a lot of people's money. Even though they can sometimes be a bit more expensive, this sometimes gives people more peace of mind. But just know that with the rules and regulations in place, your money will be covered just the same in any of your options, provided they are regulated, of course. Sir Rowan's third and final route posed a different problem. Before he could even tackle the dangerous path that lay ahead, he was first met with a sprawling marketplace, full of vendors offering him armor and weapons to aid his journey. There was so much choice on offer. Lightweight armor to help him outrun potential enemies, large swords to take down bigger foes, and iron shields that could withstand the heaviest of blows. Each vendor was calling out to Rowan with their solution, pleading with him to buy their equipment. But this did nothing but confuse Sir Rowan, and he only had enough money to visit one market stall. If he chose the wrong option, he might not have what he needs to complete his quest, and the decision started to weigh heavily on him. Before you invest your money with a particular bank or broker, you need to know what you want to get out of the platform first. Are you looking to invest in a tax-efficient account? A pension? Are you looking to actively trade stocks every day, or passively invest into index funds for the long term? Whatever it is you're looking to do, you'll need to find a broker that offers the options you need. Again, similar to the fees, this can seem very overwhelming at first, trying to remember or write down everything each broker has to offer. But think of it like buying a house. You might want 4 bedrooms, 2 bathrooms, and a big enough garden for the dogs. Once you know what your must-haves are, it makes it much easier to filter through all of the nice-to-have options. You could also have a certain approach to investing that you share with a particular broker. For example, if you aren't interested in buying shares in individual companies, there are brokers or investment platforms that intentionally don't offer them in order to help you avoid the temptation to trade. You can use our free broker comparison tool to find which platforms offer the types of investments that you want, and you can filter by ETFs, mutual funds, shares, commodities, money market funds, and more. So I'll leave a link to that in the description to help you find the brokers that offer what you're looking for. The account types on offer and the features that you have access to through your investment platform are an essential thing to take into consideration, but at the same time, it's not as complicated as it might seem at first. So Rowan couldn't decide which vendor was offering him the correct equipment for his journey, and that's because he himself didn't know what he would need. Perhaps if he tried to scout out and research by venturing a little further forward, he could have come back to the market stalls later. But instead, he sat down in front of the 3 paths and went into deep thought about his options, but never actually made a final decision. Each route seemed to have too many things to be wary of, too many things to consider and overthink, when in reality, there was probably never going to be a perfect route. In the end, instead of making a decision and dealing with the challenges as they present themselves, he found himself in an endless spiral of analysis paralysis. After weeks of deliberation, camping out in the cold, and failing to secure his future, Sir Rowan was eventually passed by another knight, Sir Elon. Sir Elon quickly decided that while all of the routes would pose their own threats, he would push on anyway. And even though Sir Elon did face challenges on his journey, he ended up successfully retrieving the relic and became so rich that he bought every company in the village, claiming to be the original founder of all of them in the process. He was then elected as the president of the country, even though they didn't have one, and went on to father 47 children. The moral of the story is that if you spend too long overthinking your options, you're never really going to get anywhere, and other people are going to keep building their wealth, potentially at your expense. Don't get too caught up trying to find the perfect option, it's all about finding a path that will lead you to where you want to get to. And with regulated brokers, you'll probably find that all paths eventually lead to the same place. You might find out afterwards that some paths may have been quicker or more efficient or more profitable, but the most important thing is choosing a path in the first place. You can always turn back and choose a different path in the future.